the informed investor. Thanks to Century 21 agents, defying mediocrity and delivering extraordinary experiences.
Yes, a lot on our plate today with the interest rate cut. What's happened with the property market? What are we going to see on the property front in relation to that? Let's catch up as we do each week with Warren McCarthy, the CEO of Century 21. Warren, good evening to you.
Yes, good evening, John. It's been an interesting weekend. We had the NRL Grand Final, of course, but the big difference from the week before when the AFL Grand Final was on was that they had their final on the Saturday, whereas NRL's on the Sunday. So we still had a fairly good number of auctions going through Sydney on the weekend. In fact, over 316 auctions were put to the marketplace, and 79.83% clearance rate I thought was a pretty good one.
Yeah, pretty good. Yeah, of course, it's a long weekend, Sydney and Brisbane, and I suppose that creates an issue there with people deciding to go away, and that would have affected it probably even more than the grand final. But we talked last week about how this reverse effect would happen, that Melbourne was very quiet on grand final weekend. We're expecting a big bump post the grand final. What happened?
Yeah, it was. They had 777 auctions on the weekend, and last weekend, you might recall, there was only 103, so that was a vast difference, and they sold near 74% of those that went up. So it's a pretty good result, and the market continues to show itself as one of being strong, and I did a quick number before. There's been 20 weeks since we had the federal election, and most of those weeks have seen an improving or a strong auction clearance marketplace. So I think the 70s and 80s as percentages of properties sold is pretty damn good and representative of that supply versus demand issue that we see in basic economics.
Sure. That's Melbourne and Sydney. What about Brisbane? How did we go there?
Yeah, Brisbane had a not a bad time. They had 92 auctions put up and 37%, so that's down from where they've been at. They've been hovering around the 50. I'll tell you what did spike, John, was over in Perth. I did say some weeks ago that I thought Perth has been down, but they're starting to slowly show a recovery. 62.5% clearance rate for 52 auctions that were put to the marketplace. I thought it was pretty strong. And Adelaide still steady as she goes, 56 auctions for 50% clearance rate. So overall, there's over 1,300 auctions put up and 71.28% clearance as a weighted average overall. Yeah. So all in all, a pretty strong marketplace, and I think fueled by the interest rate drops that we've had since June. There's been 3 of those. The relaxed lending criteria through the APRA group, and of course the no capital gains tax issues, good investment yields out there. I think the marketplace is starting to show itself and starting to loosen up. I think we'll see a pretty strong spring into summer.
Yeah, the interest rate thing, of course, we've seen interest rates go down in the past and then they go up, but this time they're at historic lows, and the word from the Reserve Bank is they're going to stay there for a significant period, like into the medium term. So how does that factor in, first of all, for people who might be upsizing, downsizing investors? I guess it's good news for all of them.
Yeah, it's an interesting predicament. They're talking about another rate drop on Melbourne Cup Day, actually. That would be the 10th drop since May of 2013, which is about 6.5 years ago. Would you believe the base rate then was 2.75%, and we're looking down the barrel of a 0.5% as the base rate. So, I mean, always the million-dollar question, will the rate change be passed on by the banks? It was pleasing to see that they did, in fact, put through the October change, and that's good to see. Look, will investing improve? I mean, I think it is. The yields out there are pretty strong, so I think the investors are starting to come back into the marketplace strongly. First-home buyers are definitely making up a good percentage of all of the mortgage borrowings out there, in fact, around a third. And like anything, this is all deemed to try and stimulate the economy, which has been one that's been stalling, and it needs that impetus to really get some sort of multiplier through it. And I think any change in the rates is good for people to go out there and buy their house, buy their car, buy a holiday or something that gets that generation of income through the economy. And I think it's slowly but surely going to have its mark.
Okay, and I guess the weeks ahead, we'll start to see, because we see the clearance rates. I guess the question is how prices are going. That'll become clear in the weeks ahead, won't it, as well?
Yeah, whether it's going to be another sort of bull run, I think it'll be a steady run. I don't think you'll see this sort of vast improvement in price. And look, people work on fear and confidence, and I think there's a general underlying fear that they get in now before there is another price hike in the foreseeable future. But I don't see it, John, in the short term. I think it'll be just steady as she goes over the next quarter, and probably see some rises of between 3 to 5% in the course of 2020.
Yeah, and just to reinforce what we talked earlier about the clearance rates, that's the auctions and the numbers that are actually sold. It doesn't mean you're getting this huge surge in prices, a massive surge, but you are seeing the clearance rates go up.
That's right. And look, money being so cheap at the present, and certainly the cheapest we've seen in history, people are starting to find that, hey, let's borrow that little bit extra, let's get into the marketplace and let's ride the next journey of the cycle. It's come through the bottom. It's just starting to come up a fraction from the bottom. And I think they're in for good times over the long term, because, real estate should be deemed a long-term investment. I always suggest it should be 10 years or more.
All right, Warren, as always, very interesting. Thank you so much. We'll catch up next week.
Good on you. Thanks, John.